Hi guys, welcome back to this episode of Mr. Money TV. Now, last few weeks we have been talking about property, and this week we are going to talk about something that's a little bit different. We are going to talk about the hot topic in economy of Malaysia today, which is the OPR rate.
Big mother.
Last few weeks there have been a discussion on whether the OPR rate will be cut or not. Now, for some of you guys who are not familiar with this term and you've only seen it in newspaper these days talking about OPR, you may be wondering what OPR is and how does it affect you. And so in this episode, I will share with you guys what OPR is and how does it affect you as a regular Malaysian. OPR simply means overnight policy rate. Now, what overnight policy rate is? It is basically the interest rate that bank will charge in between each other when they lend money from each other. Now, sounds a little bit complicated, but put it this way, okay, every bank needs to maintain their cash flow liquidity. And to do that, it needs a lot of money, right? But at any point of time, they may not have so much of cash at hand. So what will they do? They will immediately borrow money from the other bank. For example, Maybank may borrow money from RHB, RHB may borrow money from Mbank, and Mbank may borrow from Maybank or CIMB, and they will actually just borrow money from each other overnight. They'll probably borrow tonight and return it tomorrow, or within a day, or within a few hours. That is how it goes. So this is what they call an overnight policy rate. Now, so when banks borrow money from each other, they charge each other an interest because end of the day, it is business, right? Now, you may be wondering, if the interest rate in between banks increases or decreases, how does it affect you as a normal consumer? Now, you must remember, banks are businesses and their main goal is to make profit. So it will definitely trigger a series of events that affects you. For example, when their interest rate, when they lend money from each other increases, your loans will increase in interest rate as well. This means that your housing loan, your car loan, your property loan, your personal loan, your business loan, the interest will go higher. But on the good side is, your deposits will have a higher interest rate as well. This will lead to a higher rate in fixed deposit, bank rates when you put money with them. However, if there's an OPR rate cut, which means the lending in between banks, the interest rate is lower now, then what happens is it will trickle down to a series of events where your personal loan, your property loan, your car loan, or whatever loan that you take from bank will also have an interest cut. So you have more savings in terms of the interest that you are paying. And on the other hand, your deposits with the bank will also have lower interest rate. This means it will lead to a lower interest rate in FD or your other savings. Now, over the last few weeks, there has been a discussion of whether the OPR rate should be cut or will be cut in the next discussion that will be taking place in July. Now, what will happen to the Malaysia economy if, let's say, there's an OPR cut? First thing, when there's an OPR cut, it means that the deposits that you're putting with the banks and so on may be having a lower interest rate. When it's going to have a lower interest rate, the chances are people will take out their money and put their money into other investments that will have a higher growth or higher return, right? So this will give a boost to the Malaysian market, encourages spending and encourages investment in other areas. Now, number two, it means that interest rates are lower when you take a borrowing from the bank. It means when you take up a personal loan, your property loan, your car loan or business loan should have a lower interest rate. Now, this with the lower interest rate, this will encourage consumer to take more loans with bank. So there should be more loan application with the bank. By looking at this, it will also be something good and somewhat in line with the current Malaysia policy. Now, currently Malaysia is trying to encourage people to own their own home and pushing out a series of activities to boost the property sector. Now, by having an OPR cut, it means that having lower interest rate, then it probably will make people more interested to take property loan and therefore being able to boost the property market as well. Number two, for those who are actually starting their business or thinking about expanding their business, they probably will be trying to take a business loan, and this is probably a good time. If let's say there's an OPR cut, it will help them to get lower interest rate in their borrowings from the bank. However, on the other hand, because of the lower interest rate, it also means that banks have a lower margin of profit. So how will this affect the bank? It means that the interest rates are lower, their profit margin is lower. But on the other hand as well, it usually will be compensated with a higher volume of businesses coming in. It means higher volume of loans that come in because people want to take the opportunity of lower interest rate and borrow more money from banks. So that kind of compensates it. It kind of depends on each bank on how they go about. So as a conclusion, how does this affect you as a regular Malaysian and as a Malaysian who is an investor? Now, as a regular Malaysian, it will simply affect you in this way where probably your fixed deposit returns will be slightly lesser, or either the money that you put in bank in terms of saving will have slightly lesser interest rate. And on the other side is the borrowings that you have in bank, like your car loan, house loan, those all will have a lower interest rate, therefore you save on there as well. As a Malaysian investor, on the other hand, it may be quite a good news for you, especially if you are into property investment, because this means that your property loans will have a lower interest rate, therefore saving in that part. If you are a Malaysian stock investor, the OPR rate cut, as we said earlier, will actually help to stimulate the property market because of the lower interest rate, therefore leading to a more active activity that will be going on in the property sector stocks. And also the automotive industry, with a lower interest rate, there may be more people buying cars and getting new cars and so on. Therefore, that will also give a boost in the automotive industry, or whatever kind of businesses that requires high gearing, which means that they need to take more loans from banks. So companies that actually have a lot of borrowings from banks in RM will actually have a lower expenditure in terms of the interest paid. So these are some of the stocks that you can take a look at. Companies, number one, companies that are property related. Number two are companies that are vehicle related, automotive related. Number three, companies that actually have high borrowings from bank. So if there is an OPR rate cut, these are the few kind of companies that you should take a look at because it will become more and more active. So that is what OPR is all about and how it relates to you as a regular Malaysian or as a Malaysian investor. So that's all for today. Thank you very much for watching this episode of Mr. Money TV. If you like this video and you find it beneficial for yourself, please click the button below, give me a like. And number two, if you find it beneficial for yourself, please share it with your friends and subscribe to my channel for more updates.